Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 14th of December, 2021. This is episode number 2135. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, we have the NASDAQ, which is the weakest of the bunch today, down 106 basis points versus the S&P, which is down 61 points. Overall, the market has a mild risk-off sentiment. We have the indices down across the board with the notes, the treasuries essentially having the same, not as bad, but still drifting down. Yesterday, the 10 years and the bonds actually rallied into the close. The S&P sold off into the close. And so there's this defensive stance. We're seeing crude just getting hit a little bit here. Crude, you see that falling right there. It just exploded downwards from $70 and about $70.10 down into the 69 handle. Not expected for crude, by the way. Crude was expected to push to 75. It just couldn't hold yesterday. Took a long yesterday in crude. Just a beautiful setup that ended up stopping me out without a scale and then finally breaking before selling off in the afternoon. So just everything seems heavy currently. News flow is very much Omicron based. There's the UK is going on an aggressive booster shot campaign. The first case of Omicron was found in China. And the first death of Omicron occurred in the U.S., I believe, yesterday. So mainly that's what's driving things. Also, inflation jitters. We got the PPI today. PPI in the U.S., that's the Producer Price Index in the U.S., came in at 0.4 higher. PPI came in at 0.7 on the core versus 0.4 expected. PPI month on month came in at 0.8 versus 0.5 expected, higher than expected. In addition to that, we have the FOMC meeting, which starts today, and we get the decision tomorrow. So the market's in a defensive stance currently. So that's where we stand. Looking at today, the only thing remaining is the API crude oil stock change, which occurs right after the close at 4:30 Eastern. And then China has a slew of numbers, as you see in front of you. I'm not going to go through them. I want to remind you again, it's quad witching week. It's expiration week. We're trading March this week in the U.S. indices. The German DAX and the Euro stocks roll on Friday morning, so you can continue to trade December until then. That's where the liquidity will be. In terms of the S&P, the S&P's got 202,000 contracts, which is pretty decent action. The range, however, is quite high. The S&P is in a double distribution profile with a very bullish look to it. We'll go over that in a minute. The overnight inventory is expanded to negative 27%, meaning 27% of the volume's more short than long, and the point of control is at 46.48, has shifted quite dramatically down from the prior 4,700, 4,705, something like that. So overall, this looks quite bearish. The structure is such that we've consolidated for 3 days or 4 days and are extending to the downside. We'll talk about that in a minute. Yesterday's, just real quick, yesterday's primary scenario is an attempt higher, and I expected it to push down, expecting it to get down into the 78 or so area. So that actually, it got more aggressive than that. Let's take a look at what actually happened. Here's what happened. Again, this is a 1x8 PNF. We can use Renko's as well. PNF shows the consolidation areas. It makes it a little bit easier when the market's not so fast. It makes it easier for me to see where the structure is. Yesterday, We opened, we pushed to 47, we pushed down actually to, let me see what it was, 46.97.50. We pushed up to 47.01.50, and then we just down, 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 down we went. And if you look at where it was compared to the RTH VWAP, which is right there, or the RTH mid, which is right there, or the full session VWAP, which is right there, full session mid, it was just weak all along. So short side only trading yesterday, as I'd mentioned in the head trader channel at Convergent Trading, short side only. And so it was just a question of sizing your stop in a way where when it flashes back, it doesn't take you out before it continues. So pretty weak. We had a normal variation day yesterday with a relatively bearish close. We closed near lows yesterday. We settled near the low of the range at 46.59.50. So the expectation, now remember, this was neutral, extreme high, neutral, extreme down, neutral, extreme up, and yesterday is a normal variation down. So this is just choppy as all can be. You could see from the size of yesterday's bars versus the prior session and the session before that there's a lot more, there was a significantly more activity yesterday. Not by too much, but there was more activity yesterday than the prior 2 days, and it's finishing down. So we're clued into the fact that we expect this to push lower overnight. Let's look at the overnight. This is a half hour. The overnight session opens, it immediately tests down, and it starts to climb back up, but it really doesn't do a very good job. It pulls right back to the RTH VWAP where we left it right back here. And then from there, the European markets open, and at about 4 a.m. Central, it completely exploded to the downside. Lots of Pfizer headlines, lots of headlines out of South Africa and Omicron virus and so on. And then we get PPI right here, and then the market just falls off. This is inflation-based in my opinion, but who knows? It's important to remember that we gave up. If you look at the master levels here, we gave up last week's low. So we gave up last week's low. That's important to note. And we are in this gap zone that we left behind from December 7th. The gap mid is around 22.75. 22.75 is the gap mid. So once we cleared, we went to 40.50. You see that? 40.50, which is the same as last week's low, which is the top of the gap zone. Once we cleared the 40.50, it was very likely to go to 22.75, and it's worked its way down pretty well. Excuse me. So given that, and I posted this on my feed, here it is, little tweety tweet. This is right off of my Twitter feed here. Oh, wrong monitor. The roll is currently 77% complete. You can see that we're at about 61%, and the average is 79% of the open interest rolls. About 21% actually trades out or is traded against whatever the position is that the person has or the entity has. So 61 from 79% gives us a 77% complete roll. And what this means is we're getting there, we're on time, we're well within the band of every roll, and the expectation is by tomorrow's open. So the 77%, the remaining 23% is likely to be done today, which means that by tomorrow's open, we are likely to see a return to more reasonable processing of order flow. The delta becomes more useful and the footprint becomes more useful. Currently, a lot of that's contaminated by the roll itself, so just be careful. It's going to have less of an effect today, but it's still in play. We have Quad Witching Friday this Friday. So very bearish stance. We had a double distribution profile before the break lower. and the market is really putting in this clear line in the sand at yesterday's settlement of 49.50, and it could not pull back to the 49.50. So the 49.50 was yesterday's settlement, today's mid and VWAP, and it just could not pull back to it. It would have been a beautiful short up there. Woulda, coulda, shoulda, as we say in trading. And then it continued lower to form a kind of a third distribution down. It might find balance here. So this is relatively weak. Again, my stance was bearish yesterday. The bias was short yesterday, and it continues to be so today. It is important that we take a moment today and look at what the composite has done. If you look at what's going on here, let's extend this. If we look at what's going on here, you'll see that we gapped up. This is the gap that we're in the middle of right here. This is from December 7th, last Tuesday. And all we've done is we've kind of shoved up and down, up and down, up and down. So we've had higher high, higher low, lower high, lower low, higher high, higher low, lower high, lower low yesterday. So this is just zigzagging. Important for when we come back up here later, and then we expect this to resolve itself, this balance to resolve itself upwards or downwards, one or the other. As it compresses, we expect it to move with force, and it's doing so to the downside. The top of the gap zone is 46.0550. 46.0550 is the high of last Monday a week ago. And this area remains unauctioned. We are currently under the 20-day simple moving average, and I expect any pop-up to be resisted. So we'll see how that plays out today, but you can see what it's trying to do. We are really in this big balance zone, and now we've cleared the big balance up top. We've cleared this neckline right here, and we are clear to drop to 46.05. which is about 100 handles from where we were yesterday. Okay, so that's the overall context. Finding trades within that is, of course, a little more tricky. Let's get into what's expected for today. I'm not going to go over the overview using Edge Pro X because you saw that yesterday and not much has changed. Let's take a look at what's expected for today. Okay, so very clear here what's going on. So if we look at this again, let me annotate. If we look at this, this is a really important area here, right? This 46.55 to 57 area. We finished at 59.50. There's a very, gosh, I wish this thing would draw a straight line. It's slanted, but that's annoying. I know I'm being a perfectionist right now, but I want to get this to finish. Okay, that's good enough. Great. So you can see that this area here, the stock zone, is very important. This is the 55 to 57 stock zone. We tested back up after we broke through this morning, and we're moving in the other direction. The next key area down was last week's low, which is a 40.50. So you want to pay attention to that 40.50 this morning to see if we regain last week's range. If we come up and regain last week's range, that's going to be important. And then the next area down is the 22, which is the gap mid, and it's an MC, a minor naked point of control. And then beneath there, we have the good old 1920. So this area here runs about 16 to 18 as the next key area. So this morning, given that we have pushed back, the expectation is we're opening out of range in the gap. So we have gap situation, and it is very likely that we would get a gap and go situation. So what I'm looking for this morning is any climb I'm looking for areas to lean against to sell for an extension down into 1618 from about 29 to 30, to the mid 30s, whatever that is. However far it goes, pulls back, as long as it doesn't get above 40.50 and brings us back into the prior week's range, I'm looking short. And the target for the short is this 05, 46.05 down to 46.00. So I'm looking for it to kind of do a lot of jockeying around down into the century figure in the 05.00 range. That's only expected to be about 34 points of range, 35 points of range. If you remember from the CT summary sheet, the range statistics says 44.25 points are expected. That's normal. Anything below 44.25 is well within what we would consider to be normal. So this is likely to take a pop and then fall into the century figure and try to pull back up to close in the gap. Very often we trade the entire gap. I don't know if you've observed this, but we trade the entire gap, come back into the gap, and then we fill in that gap. That gap zone becomes a balance zone or a new equilibrium point for the market. This is very likely to happen here. The secondary scenario is a responsive scenario in that traders see, participants see that prices have gone too far, expected to push to that 1618. Man, that is an awful 18. Holy cow. Looks like a snowman or something. And then we get this impulse up. So I'm going to be paying attention now. If any push is an impulse, which means that it's got, what is our impulse stat now? 13 points or better in a push without a 13 tick pullback. That's considered an impulse. Back to 40.50, expect it to fight the 40.50 here. And then we get our overnight point of control stat. And then the target becomes settlement, that 55 to 59 zone. The settlement becomes the key target right here before it settles off. In either case, we're getting a lower high and a lower low versus yesterday. We've broken the weekly one-time framing, which was establishing itself as one-time framing up. We've broken that, so the market is relatively weak, and I'm looking to trade from that side. But if we do get a responsive scenario, this will be it, okay? I don't know which one of these will work out. My job is to monitor the levels that I outlined here, 40, 50, 55. If it pushes up, 16, 18 if below, 22 is important. It's the gap mid. We're not expecting to get long against that or anything. It's just the middle of the gap. And so 16, 18, 05.00, and then beneath there, we get into the 80s, the 45.83, which is the MC point of control on the prior high, or a naked point of control on the prior high in that area. I'm not expecting it as far down as that. We'll see how it goes. And then tomorrow we have FOMC, so the market's likely to be very touchy about directional movement. Good luck, and I hope you gained something today. I'll talk to you tomorrow. Take care.